yesterday we were talking about capital reorganization, isn't it?
Yes, please.
What did we say about capital organization yesterday? I was saying something before we even started. Yeah, we even started some of the, like, how we go about the capital reorganization scheme. We started some calculation, how we go about certain things before my machine went off. So where were we? Did I say something about, if they say reorganization and restructuring, did I say something about them?
The restructuring, you said changing management.
Okay, the restructuring has to do with
And
changing the management team. Yeah. Okay. And what again? GM, were you the one talking?
Yes, please.
Yes. And what did I say again?
You also spoke about why restructuring.
Okay. And what was one of the things that I said?
When you want to protect shareholders' returns.
Okay. And another one that I said is what?
When you want to make profits.
Okay. The third one, just say the third one, then I will just stop there. You're not looking to the notes.
Please, forgive, bail me out.
Forgive. Someone is shouting that you should bail her out. Forgive, where are you? Forgive, where are you? I can see you. Forgive.
Hello.
Yes, someone is saying that you should bail her out.
Please, I'm here.
Yes, someone is saying that you should bail her out.
On what?
On the reason for doing reorganization.
Reason for doing reorganization. Okay.
Yeah.
So yesterday, I remember we discussed that when we are doing revaluation of an asset, so maybe we have some assets in the organization, and after we are revaluing it in the new company, maybe the value has increased, or maybe it can be reduced as well.
Okay.
And we said
I'm waiting. Forgive.
Please, is that? And you said we also write off debit balances in the income statements.
I've said all these things yesterday.
Yes, and
Yeah.
you said when we are also doing restructuring, and creditors will be happy because you'll be paying them back their money because you are reorganizing your staff. So definitely there will be money in the business, so you pay them back.
Okay. Then I've done well, pa. If I've said all these things, then I've done well. All right. So basically, we started with something with, you see, my focus is not about the theory. The notes are there, you can read. My focus is about the calculation part. All right. So basically, what we say yesterday is that a company can decide to do restructuring when they are making a persistent loss. Every day, every year, we are making loss, like CocoBot. But the CocoBot, if you go there, nobody will be willing to, or the government itself is not willing to do restructuring or reorganize the activities of the company. So if you are talking about restructuring, we are changing the management of the company. We assume that it is the management of the company that are not doing their work that is causing the company to make persistent loss, every constant losses. So we change the management. But if you talk about reorganization, we assume that it is the shareholders that are not doing well, or it is maybe the capital structure of the company is too much. We have more shares or we have more debts in the company. So we try to reduce or cut off some of the, or we pay the shareholders back. Maybe they are giving us lots of pressure that is causing the company to be making losses. That is causing the company to making losses. So if you talk about reorganization, we are talking about you changing the capital structure of the company. Yeah. So we said that if you are doing reorganization, it seems like you are trying to baptize or baptize a company, like you are trying to make the company being born again. So the old company will now become a new company. So what we normally do is that we reassess the assets, the activities of the company. We now start a company. We assume that we write off the old company and now coming to start a new company afresh. So if you are doing capital reorganization, we are doing this because the company is making persistent losses. That is the reason for doing that is the reason why most companies do reorganization or restructuring. You can't just be there, the company will be making profits and you say you want to do restructuring. No. These people, Chelsea will not have sacked this guy, Potter, if the team is doing well. Because Potter, the team is not doing well. Every day they are losing. That is why they sack Potter. So that is one of the examples of restructuring. A team, if you are coach that the team is not performing well, they will sack you. They will change the management. Yes, they want to bring back the team to the old days of winning. That is what we call the restructuring. So what we normally do is that if you are doing restructuring, it means that we are coming to revalue the company as a whole. We are going to write off those things that are supposed not to be there. Those things that were there, they are useless. We write them off. So if you are doing restructuring or reorganization, if you have any intangible asset, especially goodwill, you can't say you have a goodwill when you are making losses. No, that can never happen. You say you have a goodwill. How can you say you have a good name when you are making losses every day? No, it can never happen. So in the times of restructuring, what we normally do is that the first thing that we have to write off is the goodwill. Those intangible assets, we write all of them off because you can't have them when you are making losses. You can't say you have a goodwill, you have a good name when you are making losses. So we write goodwill off. If you count to the asset, we revalue the assets. Some of them will rise, some of them will fall. So we recognize revaluation gain, revaluation loss, and any other things. Sometimes the preference shareholders will also agree to reduce the value of their shares, and the ordinary shareholders will also sometimes accept to reduce the value of the shares. So the account that we use for the restructuring or the reorganization is what we call capital reduction account. Yesterday, I was saying that capital reduction account is being treated as profit or loss account. So if you are revaluing the asset that you are having a gain, the gain will go to the credit side. If you're having a loss, the loss will go to the debit side. So we just do it like normal profit or loss accounts. So I was trying to count with some figures yesterday. I was coming to count with some figures yesterday. So we count with those figures again and get the idea. Then we just move on to how to solve a question. It's just like profit or loss account, the capital reorganization, the capital reduction accounts is just like profit or loss accounts. So you use a capital reduction account to do your restructuring. Then you now come with a new company. You prepare a new financial statement for the company. So we take the figures again, then we look at a question, we solve one question, then we go to a situation where if the company wants to decide whether they should reorganize or they should liquidate the activities. How do we go about those ones? All right. So we go back to the figures again or the issues again. Then we start from there. Do you have any question before I move on? Is there any question before I move on? Forgive, do you have any question? I want to move on.
No, please. We can-
So I can move on. Okay. All right.
Yes.
Okay. I'll come in. All right. Okay, so let's start again. All right. So yesterday I was saying that assuming you have a plant of 20,000 Ghana cedis. Assuming you have a plant of 20,000 Ghana cedis. That was in the statement of financial position. In the footnote, the time that you want to do the reorganization, they are saying that the value of the plant is 925,000. So before the reorganization, we have 20,000. Before the reorganization, and the day that we are doing the reorganization, they are now saying the value, the plant has now been revalued and the value is now 25,000. What is happening here? What is happening here?
There is a gain of 5,000.
And where would that gain? Which part of the capital reorganization account would the gain go to?
We'll go to the credit side of capital reduction account.
Okay, because this is a gain, is treated as income. So we send it to credit side. The meaning is that if you go to plants, if you go to the plant, you have this balance on the debit side. So for you to make it 25,000, you come and add the 5,000 to the 20,000 at the debit side. So if you are putting this on a debit side, it means that the corresponding account should be credited, which is a capital reduction account. It's just a double entry. All right. Assuming we have equipment which has 23,000. By the date of the reorganization, they say it has been revalued to 21,500. What is happening? Sorry. 23,000. And this is 21,500. What is happening? What is happening? Before reorganization, we have 23,000. And the date of the reorganization, we have 21,500. What is happening to the equipment?
There's a revaluation loss of 1,005.
1,005. But if you go to the capital reduction account, we don't write revaluation loss or gain. We just write the name of the item, then we put the figure. So if you go to the credit side, we just write plants, then you put 5,000. If you come to the, so where would the 1,005 be? Debit or credit?
Debit.
Debit. So you just write equipment there, 1,500. Don't write revaluation loss or gain because you are going to have a lot of revaluation loss or gain. So if you write revaluation loss or gain, which one are you talking about? So you just write the name of the asset and you write the figure attached to it. Are we okay? Okay. Let's assume that we have creditors. Creditors, their value is 12,000 before. And at this one, there is now 11,000. What is happening? What is happening?
Revaluation gain of 1,000.
Okay, you can see that you are getting a gain of what? 1,000. But do you know this? We don't call it gain. Do you know how we call it? Do you know how we call it? Forgive. Do you know how we call the 1,000?
No, please.
We assume that they give us a discount. So we assume that it's discount received.
Okay.
All right. We assume that they give us a discount. But better still, you can just go to the statement and write creditors at the credit side and you put 1,000 there. Are we there? So this is basically what we do for this one. Let me count to the debtors before we move on. Let me count to the debtors before we move on. Debtors, we have you 25,000. And now they are saying that it's now 22,000. What is happening? It's now 20,000. What is happening? What is happening? Is there a loss or gain?
Loss.
Loss. So where will it go?
Go to the debit side.
It will go to the debit side. Do you know how we name it? We name it as bad debt.
Okay.
You can name it debtors or bad debt. There is no problem with it. I hope we are all getting the what we are doing. All right.
Yes, please.
Let me move it to, you see, at the time that you are doing the reorganization, any losses from the previous period should be written off. So most of the time, if you have question on capital reorganization, you see that capital surplus or the retained earnings is at it will be a credit, it will be in a bracket, or they'll put it under assets. They'll put it under asset. That is telling that it's a loss. It's a loss. So at the day that you are doing the reorganization, you have to write that loss out, because we are now forming a new company. So you can't go with a new company with a loss. We are starting afresh, no profit, no gain. So you write off the capital or retain earnings, that the income surplus, the balance over there, you write it off. You write it off. If the capital surplus or the retain earnings is a negative balance, if the retain earnings is a negative balance, this will always be under assets. Sometimes they can put it in brackets under equity, or they'll put it under assets. So if you are writing it off, what are we going to do? Is it going to be debit or credit? Capital surplus is a debit balance in the statement of financial position. Let's assume it's an asset. How are you going to do it? If you are writing your asset off, are you gaining or you are losing?
You are losing.
So therefore,
go to the credit side.
you should go to credit or debit.
Credit.
We are losing. It's just like an expense to us.
Yes.
So since it's an expense, it should be debit.
Yeah, okay.
It should be debit. The same way, if you are writing goodwill off, goodwill is an asset. So if you are writing goodwill off, is it going to be debit or credit?
Credit.
Goodwill, you are writing them
Debit.
off. It's an asset. So if you are writing it off, you are not getting anything from it. So you are losing. So you debit. Are we there?
Yes.
Right. Let me count to the. So you can see that we are only talking about asset side. We are only talking about asset side. You see, this topic itself at the university, that is not easy, but how we go do them? All right. So let's count to the shares part, the equity side. Okay. Assuming the equity shareholders has or the equity shareholders have 200 shares at 1 cedi. At 1 cedi. What will be the total value of the shares? If 200,000 shares is 1 cedi, what will be the value of the shares?
200,000.
200,000. Are you getting it? That is in the old company. But right now they are saying that the equity shareholders have agreed to reduce their shares by 0.25. Reduce their shares by 0.25. So what will be the value of the shares in the new company? How much, at what price are we going to value the shares? They want to reduce their share price by 0.25.
0.75.
The new share price will now be 0.75. What is happening? So this will now be the 0.25 will be how much? One and what? 150. 150,000, right?
Yes.
Okay. That means they are giving how much away?
50.
Would this be a gain or loss?
It's a loss.
The loss.
No.
It's a loss.
Separate the company from the equity shareholders. This is a loss to the equity shareholder, the individual ones, but it's a gain to the company because the company is supposed to pay them 200,000, and now they are saying that the company should pay them 150. What is happening?
Oh, okay. Okay.
The company is getting a gain. Are you getting the argument?
Yeah.
All right. The company is supposed to pay them 200,000, but they are now accepting 150. So it means that they are giving 50 to the company. So the company will make a gain of what? 50,000. But in some cases too, since we don't have money to pay some of our liabilities, what we normally do is that we can decide to issue shares to them. We can decide to issue shares to them. We can decide to issue shares to them. So if we are owing, maybe we have a loan note of 100,000. Now we are saying that we are going to issue the loan note holders 150 shares at a price of 0.5. What will be the value of the shares that we are going to give to them? We are issuing 150 shares to them at 0.5. What will be the value of the shares that we are giving to them?
75,000.
What is happening there? What is happening? We're supposed to give them how much? 100,000, isn't it?
It's a gain.
So we are making a gain of what?
25,000.
25,000. So this is all about the capital reorganization. This is all about. So you just have to get the figures first. Then you ask yourself, is this a gain or loss? Send it to, if it is a gain, send it to credit side. If it is a loss, send it to debit side, like expense, income and expense. Are we okay there? Are we okay?
Please, who is gaining?
Is that?
The second scenario, who is gaining?
Who is what?
Gaining.
If I'm owing you 100,000 and you say I should give you 75,000, who is owing? Who is gaining and who is losing?
No, please, I mean the 0.5.
Yeah, the 0.5 is the share price. They accepted 150 shares at a price of 0.5, 50 pesos. So it means that we are going to give them the shares to the value of 75,000. And in actual sense, we should have given them shares to the value of 100,000 because we are owing them 100,000. The company is owing them 100,000. And now they are accepting 75,000. So who is gaining? Is it the company or the loan note holder?
The company is
The company is what?
gaining.
Okay, so your question is now answered, isn't it?
Yes, thank you.
Okay, we can move on. Which of the JM are you? John Mahama or which of them? Or Janet Mandu?
Joyce Mahami.
Joyce what?
No, Joyce Mahami.
Joyce Mami.
Yes.
Okay, so you are Joyce's mother.
Yes, please.
Okay. Thank you. Thank you for the clarification. All right. So basically, this is what we do about the capital reorganization. So if you are going to prepare a new financial statement, we now pick the figures at the date of the figures that we have gotten at the date of the reorganization. Those are the figures that we use in the new company now. So we are just going to pick a question, then we look at it, and maybe we pick another question, then we see how far. I think we should be able to solve 2 questions today on capital reorganization. Maybe then tomorrow we look at if the company, no, that will be next week. If the company wants to, if they have 2 options, either they should close down the business or they should reorganize. Yes. How do we go about it? All right. So let's pick a question, then we go about. In the note I've given, if there is a decrease, what you should do, what you should debit. I don't have time for that one. All right. All right. This is the first question. Okay. Who is going to read for us? Who is reading for us?
It's not showing. Oh,
Who is reading? Forgive. Or you can't see my screen here. You can only see the power, the Excel.
it's
Sorry.
not showing.
Okay, sorry. I'm the one who is not sharing it. All right. So can you see now? Can we see now?
Yes, we can see.
Yes.
Okay, so who is going to read for us? Which of the lady among us has a very nice voice? Because I'm not feeling well, so I can't hear the voice of a guy. I will just die. Kevin, are you here?
Yes, please.
Okay, read for us. I'm not sure. I don't know you are here. I want to.
MM Limited,
Uh-huh.
producers of telecommunication equipment, has been making losses in recent times. The directors have proposed a scheme of reorganization to take effect on 1st October 2013. The statement of financial position of the company at 30th September 2013 is as follows. Statement of financial position as at 30th September 2013. Non-current assets, premises, 80,000 Ghana cedis. Plants and equipment, 190,000 Ghana cedis. Vehicle, 30,000. Current assets, inventory, 40,000. Trade receivables, 30,000. Bank, 10,000. Current liability, trade payables, 140,000. Net assets, financed by stated capital, issued and fully paid, 100,000. 7% preference shares of 1 cedi per share, 400,000. Ordinary shares of 0.75 fully paid, retained earnings. Additional information.
Okay.
The ordinary shares are to be written down to 0.25 cedis per share and then to be converted into new ordinary shares of 1 cedi per fully paid.
Okay, stop
Two.
there. Stop there. I want to ask a question. The ordinary shares are to be written down to 0.5 per share. So what will be the new price of the share now? Per share. What will be the
0.75.
no? That is the old one. The ordinary shares are to be written down to 0.25 per share.
0.50. 50.
No, they are to be written.
0.25.
Yes, that is the
No,
new.
0.25 is the new price.
That is the new
0.25.
price. If they say it should be written down by,
Written down to
if they say by, that means it will be 0.5. But to now is the new one. So that means they are giving away 0.5 per share to the company, isn't it?
Yes, please.
And that will be a gain to the what? To the company. Are we there?
Yes.
Let's take the next one. Okay.
2. The preference shareholders are to receive 40,000 ordinary shares of 1 cedi per share, fully paid in exchange for their preference shares.
So how much of the ordinary shares will you be giving to them now? 40,000 at how much? We are giving them 40,000 shares at how
At
much?
1 cedi.
So what will be the total value?
40,000.
What?
40,000.
How much are we owing them before?
Once
700. 100,000.
100,000.
What is happening?
100,000.
Are we losing or we are gaining?
We are gaining.
You're
Okay.
gaining.
Let's move on. Don't worry. We will prepare the account and we look at those things. All right.
3.
Mm.
Dividends of 7% preference shares are 2 years in arrears.
Okay.
In consideration of waiving their rights to arrears of preference dividend, the preference shareholder have agreed to accept 10,000 new ordinary shares of 1 cedi per share, fully paid in final settlement.
Okay. The question is, go and ask yourself before you know whether you are making a gain on the dividends that they are accepting the ordinary shares for. Go and ask yourself, do you have the dividend in the accounts? Let's go to the financial statement. Do you have any issue about dividends in these accounts? Do you have any dividends in these accounts? We don't have dividend, isn't it? We don't have the
Yeah.
dividends in account. So if we are bringing back a dividend, is it a gain to us or is it a loss to us?
A loss.
It's a loss.
It's a loss to us,
A
isn't
loss
it?
to the-
Okay. Okay. But if you should have a dividend, what should have been the actual price of the dividend before? What should have been the actual value? It is 7% on 100,000. That is how we calculate the preference shares dividends, isn't it?
Yes.
So 0.07 times 100,000. That will give us what? That will be 7,000, right?
Yes.
And they say it's 2 years in arrears, so that will give us 14,000.
Yeah.
But if you should have 14,000 in the statement of financial position, it means that we are going to make a gain of 4,000. But this one, we don't have it. We are now coming to bring it. So we only bring the one that we are giving to them. We are only going to pay them 10,000 equity shares at 1 cedi. So it means that we are paying them 10,000 Ghana cedis or 10,000 cedis. But if you should have issue about dividends in the question, in the statement of financial position, it means that you are going to have a dividend of 14,000 there. Since you have the 14,000 that you are paying them 10,000 now, it means that you are making a gain of what? 4,000. But in this case, there is no dividend there, so we can't compare anything. We are now coming to make a loss because we don't have any plan for them. Then they say that they want to accept equity share, so you have to give them money. So that is a loss to us. So don't say you calculate a dividend for 2 years and say you are making a gain of what? 4,000. You can only make a gain when you have the dividends in the statement of financial position. That is where you are going to compare how much you are paying now and how much you should have paid. Are we okay with that one? Let's move on. All right.
4.
Yeah.
The creditors have agreed to take 100,000 new ordinary shares of 1 cedi per share, fully paid in part settlements of the amounts due them.
So let's go and look at the amount that we are owing the creditors. Let's go and look at the amount that we are owing the creditors. How much are we owing them?
140,000.
Okay. How much are we paying them in return? Let's go and look at it. Okay. The creditors have agreed to take 100,000 new shares of 1 Ghana cedis per share. So how much are we paying them?
100,000.
So what is happening?
You gained 40,000.
Okay, don't worry. I hope the this thing is coming. So let's move on.
5. 5.
Yeah.
The balance on the retained earnings account is to be written off.
Let's go and see what is the balance on the retained earnings account. Is it a positive figure or a negative figure?
Negative.
So if you are writing it off, are you gaining or you are losing?
You are gaining.
No.
You are gaining.
Please come again. I didn't get that.
Okay. The retained earnings is negative, isn't it?
Yes.
You have to know that the retained earnings is for the equity shareholders. So in this case, it means that the company is owing them, because if we are having negative, it means that it becomes a liability to the company. So this, in other words, this should have been reported as an asset. You should have just go and add it to the asset. Okay. So if this is an asset and the company is now writing off an asset, what is happening?
It's a loss.
It's a loss. It's a loss. So retained earnings negative is always a loss, unless it is a profit that the shareholders are saying that, okay, we want to give you the profit back, take it. That is when it will be a gain. Are you getting it? All right. All right, let's move on. So the retained earnings is always a loss. If you're writing it off, it should always be at the debit side. All right. So we have that one too. Let's come here.
Number 6.
Okay.
Some assets of the company have been revalued and are to be incorporated into the accounts as follows.
Okay.
Freehold premises,
Okay.
100,000.
Let's go and look at the freehold premises that we have. What is the value of the freehold premises?
80,000.
What is the new value?
80,000. 100,000.
100,000.
Gain or loss?
Gain.
A gain of 20,000.
Okay, let's move on. Let's move on.
Plant and equipment,
Okay.
125,000.
What was the value in the statement of financial position?
190,000.
190.
So what is happening?
There's a loss.
Loss.
A loss of how much?
35.
Loss of about 65.
Is it 190 in there? Don't worry, 180.
190.
190, 65,000.
Okay, so we have a loss of 65. And what else?
65.
Okay,
Vehicles,
okay,
25,000.
okay. Should I be drawing the account at once, or we should go over it before we start again? We start doing the calculation again.
Please go over it before.
Okay, let's move on. All right. Vehicles is how much?
25,000.
Okay.
Inventories,
Vehicles is how much?
36,000.
Vehicle is 25. But what is the figure here?
30,000.
So what is happening?
A loss.
There's a loss of 5,000.
Okay, inventory is 36.
Yes,
But what is the inventory figure here?
40,000.
So gain or loss? Is it a gain or loss?
A loss.
It's a loss.
Of 4,000, isn't it?
4,000.
Okay, let's move on. Let's move on. Okay.
7.
Okay.
7. An allowance of 3,500 is to be made for doubtful debts.
Expense or again?
Expense.
Okay, it's a loss
An expense.
because our receivables will reduce by 3,500, which is a loss. We are getting the money from them, and now we are not going to get it again. It is going against us. So it means that in the statement of financial position, how much are we sending in respect of trade receivables? How much are we going to send? We have 30,000 now, and we are saying that we should write off 3,500. So how much are we sending there?
26,500.
All right, that is very nice. Let's move on. Okay.
8. The ordinary shareholders have agreed to inject additional 90,000 cedis cash by acquiring 120,000 cedis ordinary shares at 0.75 per share fully paid.
Okay. That means that they are coming to buy additional 120,000 ordinary shares. Are you there? Okay. What you are going to do first is that for you to know whether they are paying all the money in full or that is the money that they're supposed to pay, find the value of the shares that they are buying. How do you find the value of the shares that we are buying?
The cost times the number of shares.
Okay, that will give us how much?
90,000.
So that means they are paying in full, isn't it? All right. So this one,
Yes.
this transaction is between equity shares and cash. It has nothing to do with the capital. It's not a gain. It's not a loss. Are we getting it? So this one will just go to cash and what? Equity shares. It will not go to the capital reduction accounts. The double entry over here is debit cash and credit what? Equity shares. It has nothing to do with the capital reduction accounts. Are we okay? All right. Let's move on.
9. Reorganization cost amounted to 7,500 Ghana cedis.
Okay. Is it going to be
Required.
is it going to be a debit or credit? The cost
Debit.
Debit.
is an expense to us,
Debit,
isn't it?
sir.
All right. So this we are going to pay it by cash. So at the end of the day, we send it to cash. We are going to write it against cash because we are going to pay this out this amount of money by cash. All right. Let's look at the requirements.
Required. A. Prepare a capital reduction account, stated capital account, and bank account.
Okay.
B. Prepare a statement of financial position of Limited as at 1st October 2016 after the reorganization.
All right. So we have the first one is capital reduction account, stated capital accounts, and bank accounts. All right. So let's come to capital reduction accounts. Capital reduction accounts. Okay, capital reduction accounts. Then we have debits. We have what? Credits. All right. So we start one by one. Let's go and be picking the items one by one. Okay. So the first item that will come is what? Let's pick the additional information again. Okay. The ordinary shares are to be written down to 0.5 per share and then to be converted into new ordinary shares of 1 cedi per fully paid. So what will be the new value of the ordinary shares now? What will be the new value of the ordinary shares now?
300,000.
Oh, value, sorry.
The old value was 300,000.
New value is 200,000. 200,000.
The new value is 200,000. No, it's 100,000.
It's 100,000.
But how much?
100,000.
How much are we owing them before?
300,000.
So we are making a gain of what?
200.
So you just write the ordinary shares. Ordinary shares. Then you put the 200,000 here. Are we okay? Let's move on to the next one. So they say we should prepare stated capital account, isn't it? All right. So let's
Please
put
take the ordinary shares.
the ordinary shares. They are saying that the ordinary shares are to be written down to, not by. If they say by, it means that you are going to reduce by 0.5, but they say are to be written down to. So the to means this is the actual price now. So 0.25 is the actual share price now. It means that they are having 0.75 first. Right now, they want to have it at 0.25. It means that they are writing 0.5 off. So for you to get a 0.5, you just multiply by 400,000 and get 200,000. So that means they are giving away 200,000. Are you okay?
But if it was by, you said repeat that please again.
If it is by, it means that you are going to reduce the 0.7 by 0.25. So the new share price will now be 0.5.
Okay, sir.
Are you okay there? Sina, are you
Okay,
okay?
sir.
Okay. So we are going to have a stated capital accounts. Stated capital accounts. Stated capital accounts. Okay. So right now we are going to have the new ordinary shares now, which will be 100,000, isn't it? The new one is now 100,000. The old one will go. Okay. So let's move on to the second footnote. The preference shareholders are to receive 40,000 ordinary shares of 1 cedis per share, fully paid in exchange for their preference shares. So how much are we owing them? How much are we owing them? Preference shares, how much are we owing them?
300,000.
And how much are we giving to them?
40,000.
So what is happening?
It's a gain.
We have a gain of what?
260,000.
So preference shares. We are having a gain of what?
60,000.
60,000.
It's
Okay.
60,000. Yes.
So where would the 40,000 go? They are now accepting ordinary shares, isn't it?
Yes.
So that preference shares will now be converted to ordinary shares. So we send it to ordinary shares. That's it. The 40,000 will now be ordinary shares. They now be converted to ordinary shares. Are you okay with that part?
Please, can you go over the
No,
preference?
please go over again.
Okay.
No,
All right. They say that the preference shareholders are to receive 40,000 ordinary shares per share, fully paid in exchange for their preference shares. So right now they are saying that we are no longer to be a preference share of the company. We want to accept 40,000 Ghana cedis and we become part of the owners of the company. So the 40,000 will now be added to the equity shares of the company. They are no longer to be a preference shareholders because they are receiving ordinary shares. So they are now ceased to be a preference shareholder. So the equity shares will now increase because the preference shares are now converting themselves to equity shareholders. Are we okay? Can I move on now?
Yes, you can.
Okay. The next one is what? The next one is what? Dividend of 7% preference shares are 2 years in arrears in consideration. So we are giving them 10,000, isn't it? We are giving them 10,000. But we don't have any issue in the financial statement about dividends. So we are bringing the dividend back. So we are paying them money which we haven't made provision for. That is an expense to us. That is an expense to us. So you have a dividend over here. You have a dividend over here, which is 10,000. Are we going to add it to the preference shares?
No, Linus.
Yeah.
How did you get the 10,000?
Okay. Should I read the statement for you, or you are going to read it yourself before I talk?
Okay, that's fine. I've seen it.
Okay.
I didn't see that.
Okay. So we are giving a 10,000. What are we giving to them? It's not ordinary shares. We are giving them ordinary shares in return for their dividends, isn't it?
Yes.
So what will happen to the ordinary share? Is it going to increase?
Yes.
So we have dividends now. Dividends will now we are changing the dividend now to ordinary shares. So we change it, and this will now have 10,000. Are we okay? Can we move on? Okay. Let's count to the creditors have agreed to take 100,000 new ordinary shares of 1 cedi per share, fully paid in part settlement of amount due to them. Okay. So it means that they are not taking this as a full settlement for the amount, isn't it? They are just converting some of them to ordinary shares and keeping some of them as creditors. So there is no gain on them. So it means that 100,000 out of the creditors will be converted to ordinary shares, but the remaining will be kept as what? Creditors. So it means that 40,000 will still be a creditor or will still be a trade payables, but 100,000 will be converted to what? Equity shares. There's no gain. Are we getting that part?
Yeah.
So they say in parts, fully paid in part settlement of the amount due them. So we are just paying parts. We are just paying parts. They are not giving all away. You are just paying parts. The remaining will be there, then you pay. So what will happen is that the creditors' value will now reduce to 40,000, and they will now be part of the what? The ordinary shareholders. So they will change 100,000 to ordinary shares, and those people who don't want to be ordinary shareholders will now be keeping the 40,000. Can we move on? The balance on retained earnings account is to be written off, debit or credit?
Debit.
Retained earnings will be debit. How much? How much is that? 160,000 or 140? Okay. 140. That will be 140 or 160. That is 160.
160.
All right. Okay. Let's move on to the next one. Is it that we are paying attention or we are lost? Some assets of the company have been revalued and are to be incorporated into the accounts as follows. So freehold premises, you compare the new value with the original one. Is it an increase or decrease? If it is an increase, that is a gain. All right. So the value was what? 80,000. It's now 100,000. A gain or loss?
It's a gain.
A gain of how much?
20,000.
So we put it on the credit side. Let's move on to the net assets. The next one is what? The next one is what? Plant and equipment, 125. What was the original value? It's 190. So there's a loss of what? 65, right? Plants.
Yes.
Plants and equipment. Plants and equipment. We have a loss of 65,000, isn't it? All right, let's move on to the next one. Okay. Now we have 190 and now 125. That is a loss. The assets has reduced. Vehicles is what, 25,000 now, and was how much? Was 30,000 first, isn't it? Again or loss?
A loss.
A loss of how much?
5,000.
5,000.
5,000. So loss will be at the debit side. Let's move on to the next one. Inventories. Inventories was 40,000, but now 36,000. What is happening?
A loss.
Okay, someone can also mention this one. Someone can name it obsolete inventory. We don't have any problem. A loss of what? 4,000.
4,000.
Okay, let's move on. An allowance of 3,500 is to be made for doubtful debts. Again or loss?
A loss.
Okay, so that will be bad debts. 3,500. Are we there?
Yeah, please, I have a question.
Okay.
Are we supposed to open a T account for each of the items?
Yes,
Or we can just post them as you are doing?
we normally open T accounts, but if you do it like this, we don't have any problem.
Okay.
Okay,
Thank you.
but because I will find difficult to draw the T account on Excel. Maybe I don't want to waste time. That's why I'm doing it like this. So if you are doing it, do it like a T account.
Okay, thank you.
Okay, all right, you're okay then. Okay. So the ordinary shareholders have agreed to inject additional 9,000 cash by acquiring 120 ordinary shares at 0.75 per share fully paid. So this one, it has nothing, we are not having any gain, we are not having any loss. It has nothing to do with what? It has nothing to do with the capital reduction accounts. But this transaction is between equity and cash. So we are going to have cash. People are buying new shares. So we have 90,000. Then we count to our cash account because the question says we should open cash. So you can say cash accounts. Then a cash account, what are we starting with? We need to start with the opening balance, isn't it? We need to start with the opening balance, which then because we have bank over there, let's put the bank over there. So we start with the opening balance, which is the balance brought down. The balance brought down is how much?
10,000.
Is 10,000. So we now have equity because we are going to receive cash. Our cash will increase, which is 90,000. The double entry has been done for that particular transaction. Let's move on. What's next? Reorganization costs amounted to 7,500. Gain or loss?
Loss.
A loss.
A loss.
So reorganization cost of how much? 7,500. So we have to pay this particular amount straightforward, isn't it? So you have to pay this one out of cash. This cost that you are going to incur, you have to pay it out of cash. So you come here, reorganization cost, you pay it out of cash. Reorganization cost, you pay it out of your cash. Reorganization cost. Then maybe you can put it in a bracket over here, 7,500 to be in brackets. Means that you are subtracting. All right. So we are done with this one. We can now add up right now and see whether which side is high, which side is what more, which side is more. Let's add the debit side first. Someone should add a debit side, someone should add a credit side.
I think USA will finish it faster.
They also will finish fast.
Yeah.
Okay, so what will happen is that let me just put 0 zeros here so that I can use the Excel. Okay. Okay, what are we having? Which side is bigger?
Credit side.
Debit side is what? Credit side is bigger, isn't it?
Yeah.
So what do we have to do? We have to add some amount to the debit side to get the same side as the credit side. How much are we going to add?
$25,000.
1,500.
That 25,000, is it a gain
Five.
or is it a gain or it's a loss?
It's a
It's
It's
a gain.
a,
It's a
it's a
gain.
loss.
It's a gain. The gain side is more than the loss side. It means that if the incomes are more than the expenditure, it means that we are making profit, isn't it? Are you okay? If the income is more than the expenditure, we are making a profit, isn't it?
Yes.
So this profit will always go to capital surplus.
yes.
So you put it on capital. So if this will be 25,000, if you are doing this and the debit side is more than the credit side, that means the expenditure is more than the income. We assume that that particular loss is a goodwill, meaning that the company is still, though they are making loss, but they are still having some good name there. So name it goodwill. But if the credit side is more than the debit side, it's a gain. So we send a gain to capital surplus. We send a gain to capital surplus. Are we okay then? Are we okay?
Please repeat that side again.
If the credit side is more than the debit side, it means that the income is more than the expense. So we are making a gain. Then we send a gain to capital surplus. But if the debit side is more than the credit side, it means that our expenditure is more than the income, which is a loss. But we assume that that particular loss is the portion of the goodwill that is retained. That is retained. Because we can't, though the company is making loss, but they are still having some good name over there. So we take that portion as a goodwill. We take that portion as a goodwill. Can I move on now?
No, if
Yes,
the
please.
debit side, please, if the debit side is more than the credit side,
Yeah.
what then happen? Do you still take to capital surplus but as negative?
Yes. So it's negative, but we name it goodwill. It means that we should not have written off all the goodwill. So that means the company is still having some better name or some good thing over there. Maybe the employees are still good and those kind of things. So we just name it to be a goodwill.
Oh, okay.
Yeah. We don't make it negative anything. We just make it maybe portion of the goodwill should not have been written off. All right. Now the equity 340,000. What will happen to the bank? The bank, what am I going to have? Okay, so the bank is now 925. Can we prepare a statement of financial position now?
The stated capital and the bank account.
Yeah.
I think which side of the are they debit or credit balances?
I just put them there. The stated capital should have credit. Bank should have debit.
Okay.
All right. All right. So if you are doing a double entry, then you do the correct one. All right. Okay.
Oh, please scroll down a little. The stated capital, I want to pick a figure there.
Okay.
Okay.
Okay. So we can move on.
Yes. Sir.
All right. My focus is not about the double entry, it's about the capital. The only problem that we normally have is the capital reduction account, where these things should go and where these things should not go. Statement of financial position. So what we do is that we put maybe, okay, let's just put the currency signs here. So the first one that will come is assets. All right. So what is the first asset? If you're using your phone, be mentioning the asset for me. What is the first asset? Freehold premises. Freehold premises. Are we going to use the new value or the old value?
The new value,
Which is 100,000. So we now use
100,000.
100,000. The next one is what?
Plant and equipment,
Plant and equipment. Is how much?
125,000.
The next item is what?
Vehicles,
Vehicles. Shit. Vehicles. Vehicles is how much?
25,000.
Okay. Do you have any other non-current assets?
No, please.
Okay, so let's just sum this one up. So we have current assets, right? Okay. So the first current asset is inventory, isn't it?
Yes, please.
What is the value of the inventory?
36,000.
36,000. What is the next one?
Trade receivables,
So how much are we using for them? It is the new value. It is the old value minus the bad debts. What
Bad
was the old
debts.
value?
The old value was 30,000.
30,000.
So what was the bad debts?
3,500.
3,500.
So what will now be the new value?
26,500.
26,500.
Okay. Can we move on? The next one is what?
Bank
So the
or
bank we
cash.
is bank. They don't have
Bank.
cash. So the bank we are
Bank.
coming to use the amount that we do for the workers. This is not a bank figure. Because there are some things, there are some cash inflows and there's cash outflows, which we have to do the workings for the bank. So don't use the figure that we have over there for the bank. Bank, this is what they are not serious. Supposed to be 92,500. All right. So that is for all the current assets, isn't it?
Yes, please.
Okay. So this will now give us our total assets. Total assets. So we have the finance by. We have the finance by. Okay. Then the finance by, what are we starting with? Is it stated capital? Is it stated capital? So what is the value of the stated capital now? The workings that we have done is 340,000. Don't go and quote the shares, so because you can see that one of them are at 0.75 and some of them at 1 cedi. So you don't know the value that you place on them. Just come and pick the total value. So just come and put a figure here. Don't try to do anything. Don't try to say you want to do equity shares. Then the number you say they are valued at this. You can see that some of the shares are being issued at 1 cedi. Some of them are issued at 0.75. What value are you going to put on them? So just write the total figure there and leave it. Don't say anything. Are we there? The preference shares have been converted into what?
Please, can you go to the stated capital account? I want to check something.
Okay. This is the stated capital. This is a new balance for the ordinary shares. Preference shares, they have converted their preference shares to this one. Dividend too has been converted into equity shares. Creditors has also converted 100,000 of their amount due them to equity shares, and equity shares have bought new shares with cash. Then we add all of them, we have 340. Can I go down now?
Yes, please. Thank you.
All right. So I'm saying that you see in the financial statement, they have written the equity shares and they have put certain things there. You can see that they have issue and fully paid 100,000 this one. There's no preference shares again because they have converted their shares to equity shares. You see that they have 400,000 ordinary shares of this one fully paid. No, you can see that some of the shares are being issued at 0.25, which is this one. Some of them are even issued at 0.75. Some of them are even issued at 1 CD. What value are you going to put on it? So just put the total amount there and leave. Don't do anything again. The next item that will come is the capital surplus. What is the value that we have gotten for the capital surplus? What was the gain that we have gotten? It was 25,000. Am I correct?
Yes, please.
Okay. So let's come to the liability side. What are the things that we use as liabilities? What are the things over here? We have only current liabilities. There is no long-term liabilities. So you have current liabilities. We have current liabilities, and the only current liability we have is trade what? Payables. Trade payables. How much are we writing for the trade payables?
40,000.
It's only 40,000.
40,000.
They have converted that one to this one, so we have 40,000. So we add it to this one. How much are we getting if you add it?
$405,000.
405. Okay. Total equity. Total equity. Total equity and liabilities. Okay, I want to say all right, that's all that they're asking us to do. That's all that they're asking us to do. Do you have any concern? Do you have anything that is not clear? I hope we can all now prepare capital reduction account, isn't it?
So what item is not supposed to pass through the capital reduction account, or any item at all
If
is supposed to pass through?
is the only item that will not pass through is if the item does not come as a result of reorganization, and which will not bring any loss or gain. So the only item that we send there is any item that will give us a gain or any item that will give us a loss, because this is recognized as profit or loss accounts.
Okay.
Okay.
Thank you.
All right. All right. Do you have any other
Linus,
question?
will you put the question on the page?
The question is already there.
Okay. That's fine.
The solution, will you put the solution on the page?
I should solve it. Then I have to solve it with my hand and put it there.
Please do.
What are you trying to say? In other words,
What about this one?
Then please, you
about this
can
one?
just scroll it. Say I will do screenshots.
okay, this one, if okay, so can I save this one and send it to the page for you?
Yes, you can do screenshots and
please.
just send it to
Okay,
me.
okay.
Yes,
Then
please.
let me save it and send it as Excel document.
Mhm.
Okay. So that you can go through. So let me just make this one properly. Let me arrange them very well. This one should come here. Capital surplus should come here. So let me put 0 here so that I can do. So this will be 280,000. This will be 280,000. How do I name it?
MM Limited,
Okay,
capital reduction.
okay. All right.
Linus, can I ask a question?
Do you want
Hello.
to seek my opinion so that I can give you an objective
No,
answer?
you let me ask a question, please.
Okay.
Let me draw you back a bit.
Okay.
The capital surplus of 25,000, how did you get that?
We just compare the credit side to the debit side. So if the debit side is more than the credit side, it means that we are making a gain. So we send a gain to
All right,
capital surplus.
that's fine. All right, thank you.
Okay, you're welcome. All right. So are we okay now?
Linus, please, you said that if it was a lot if the debit side was greater than the credit side, it will be named as goodwill and to be sent to which account?
The goodwill will go to statement of financial position as a non-current asset.
Okay.
All right. So we are okay now. All right. So I don't have anything to say again. It's 9 o'clock. So what
Linus,
is that?
the capital reduction account, I think that when the credit side is more than the debit side or the debit side is more than the credit side.
Any of them can be more than any of them.
So I'm saying that, so when the debit side is less than the credit side, that is where it's a gain, right?
When the debit side is less than the credit side, isn't it?
Yes,
It's
that's
a
where
gain.
it's a gain. And,
Yes.
So when the credit side is rather more than, that's where it's a goodwill.
Yes, because the balance will be at the credit side. So we assume that it's a goodwill. Because if you are crediting over here, it means that we are going to debit the goodwill account. We don't say it's a loss. We assume that it's a goodwill. All right. Okay. So I don't have anything to say again, but what I want to say is that for you to pass this exam, maybe some of you have been looking at the past question. You know how right now they are setting the questions. Sometimes they set the question like the two of you, you are chasing one lady, or maybe you are chasing that some of the examiners, they are daughters or something. I don't know, but it is what it is. So you just have to try your best, and at least I mean, see the pass mark is 50 marks, isn't it?
Yes.
Yes, please.
So they should not be owing you. You should not be owing them. That just go and get 50. That is all. So, but if for you to get a 50, the ethical issues, it will count 10 marks. It will count 10 marks. You can't go to corporate reporting exam that you won't get the ethical questions. And you know that is theory. You don't need to do any calculation. So at least if you are there, try to take some questions and say, okay, let me try to solve it. If you can solve questions that you are not getting anything wrong, it means that if you go to the exam, you can get 8 out of 10. You can get 8 out of 10. Okay, so just try the ratio.
Linus, the rest of the questions on the page, are we solving them or we should try?
We will try to solve another one when we meet next week.
Okay.
That is Saturday.
Or you solve and put it on the page for us.
No. I will solve one with you, and you will solve the rest and be sending it to me, so that maybe is it correct or it's not correct. We're not done with the capital. We are not done already. We will come into another topic again, which is if the company wants to liquidate or they want to reorganize, how do we go about it? Okay, so maybe next week, then we finish this one, we go to business valuation. Then after that one, then we move on to this one. Consolidated financial accounts. Consolidated financial statements. Yeah.
I think we will need to do more. The time, just 1 hour.
Yeah, the time is too limited for us.
Too
Too small.
limited, and the way this course is loaded, I think
So
we need to.
that was what I was suggesting, that you should solve and put some on the page so that next time we meet, we'll continue. Or
No problem. I don't have any problem with solving the question.
you can solve some of the questions and put it on the page. If we have any problem, we'll clarify it with you.
So that next meeting
we'll continue.
We'll continue with a different
solve
topic.
all of them. Solve all of them and put it there for us.
But understanding the issues is very necessary. It's not just solving. You see, there are some who probably might be attempting CR for the first time, and so some of these things are new to them. And so if you just solve question and put on the page, they might look at it, but as to some of the underlying issues, they might not get it. So maybe we need to allocate a little more time to it, and then we solve more questions.
Maybe that will be fine.
All right.
We allocate more time. That will be
okay. Okay. All your these things have been listening to. I will look into it, and we will see what we can do. We'll see what we can do. So don't worry, we'll be fine. You'll be fine. You'll be fine.
So maybe I'm watching from tiny strawberry.
You'll be fine. So this one. Okay, next time we are solving question 5. We solve the question 5, then we move on to when the company wants to liquidate or something. We just be solving two questions. I just want us to finish fast and have time and solve more questions, discuss more questions.
So Linus, all the questions on the page, is it on capital reduction?
Yes.
All the questions.
Yes.
Okay.
Yes. Some of them, they are when the company wants to liquidate, they don't want to reorganize and continue. They want to close down for some time now, and they want to come back again. They want to close that business for some time and come back.
Okay, but for that one, we haven't done that yet, right?
Yes, that is the next thing that we are going to do.
Yes, we do. All right. Thank you.
Okay. Yeah, someone was talking about the time. Oh.
Yeah, Linus, if you can extend
the 1 hour is too small.
It's too small.
It's very small.
You know what happened? Shall I mean right now I will just be there, then I will just dial. Because today in the morning I came to teach FM people. And someone one of like no, the person joined MA class. So after FM, I thought someone face to face more. And I went to teach these people, MA people, and these you people again. But don't worry, we just find time. Don't worry.
Linus,
yeah.
CR is equally important, and we shouldn't be the sufferers, or we shouldn't be disadvantaged because you want to take some people in the morning and all that. I think
if you look at the timetable, you have more time than
for our timetable. Ours is 1 hour, yes, but we are pleading with him so that he asks maybe some 30 minutes or something.
MA is once in a week. FM is once in a week. People cry you every meeting 3 times. Yesterday, it was yesterday that my machine went up. That was the problem. They don't get. So maybe sometimes I can extend it. Don't worry. Maybe next time we extend it to 10 o'clock. Don't worry. We'll be fine. Don't worry, we'll be fine. But Richard, don't worry, you'll be fine. I know why. Kevia, so is the two of you that are talking?
Yes, we wanted the time to be extended to 10 o'clock.
Yeah.
10 o'clock. Some of us we have keys in the household.
Now, if we understand the concept here and we go and solve the questions, it will be much more easier. That's why.
But for capital reorganization, you have understood everything. Are you not the one mentioning the figures for me? Okay, so what will happen is that let's try the question 5 on our own, so that we solve it again. Then we move on to when the company wants to liquidate. What will happen? The question 5 is purely on capital reorganization, question 5.
Okay.
So let's
Okay.
try that one on our own. Then we don't worry, we try our best. We try our best. We try our best. There won't be a topic that we are not going to do before we go and write the exam. So don't worry. Don't worry, it'll be fun.
Okay.
We try to cover all the topics. Don't worry.
All right, sir.
All right. So if we don't have any other thing to say, Charlie, we call it a night. We call it a night.
Thank you very much.
Okay, you're welcome. All right.